Hello traders and welcome to another video review. Today is Wednesday, May 22nd, 2024. Let's find out what is going on the Forex economic calendar today. Overnight data were very important. We got some comments from the FOMC member Bostic and Mester. We got data from Japan in form of the exports. For example, exports fell down from actually, it increased from 7.3 to 8.3, but it was not that much as expected. 11.1%. Trade balance decreased to minus 462 billion yen. Reserve Bank of New Zealand interest rate decision was in line with the expectations, and the bank decided to leave the interest rate at the level of 5.5%. Together with the interest rate decision, monetary policy statement, rate statement, and press conference were done as well. And we will definitely take a look at the New Zealand dollar later on. CPI data from the UK do not actually disappoint. The CPI beats the expectations of 2.1% with the actual number of 2.3%, which is lower than 3.2% previous number. So the same situation is with the PPI input, 0.6% versus 0.4 forecast and minus 0.2% previous data. So we will definitely take a look at the British pound today. At 9 o'clock, European Central Bank non-monetary policy meeting starts. And then we got the speech from the ECB President Christine Lagarde at 10:05. During the New York session, we got the existing home sales scheduled for release at 4 o'clock, and 30 minutes later, we got the crude oil inventories and Cushing crude oil inventories as well. The key event of the day is the FOMC meeting minutes that are scheduled for release at 8 p.m. 10 minutes past 10 o'clock, Reserve Bank of New Zealand Governor Orr will give a speech as well. So, we are going to start our technical part with the closer look at the current scenario of the New Zealand dollar. So the current scenario of the New Zealand dollar is still skewed to the upside as long as the market moves inside of this channel. Let me just move this channel line, lower channel line, so we know where we are right now. There you go. So Reserve Bank of Australia interest rate decision was in line with the expectations. The market spiked higher above the technical resistance located at 6,135. New high is at 6,147, so it's roughly 12 pips higher. Nevertheless, it was only a spike up with a long upper shadow. The market returned to the let's say to the level of 6,112, which is just below the 50 periods moving average. And since then, the bulls are still trying to, of course, to rally higher. Nevertheless, so far, no avail. As long as this market moves inside of this channel, the outlook remains bullish. As long as the price stays above the level of 6,043 pips, the outlook remains bullish. Please notice that if we go out of the channel, if we fell out of the channel and move below 6,043 or 6,039 levels, 50 periods, 100 periods moving average, and the technical support, then the outlook changes completely to bearish, and we should visit even the level of 5,991. But for now, the outlook remains bullish. Momentum is strong, 59 points. Momentum is positive. So maybe during the next few days, we will have another swing high on the New Zealand dollar. Remember, Reserve Bank of New Zealand dollar left the interest rate at the level of 5.5% as expected. So there were some data from the UK. So let's find out what's going on the cable. As you can see, the better than expected data didn't actually help us and our scenario, so we will need to remove and adjust our scenario. We broke above this technical level here, 1.2690, 1.2707. Now the local high today was made at 1.2752, and we are heading towards the 1.2775. If we zoom out, we can see that the 1.27 and 75, this is the level from, oh, it's so old, very old level. Let me just adjust this level, because it looks like the market might be going even higher towards 1.28. Actually 1.28 is the swing high of the 21st March 2024. So this is the next target for this market after we broke above the supply zone. So right now we are going to remove the supply zone. We are changing our levels to that were the technical resistance now to the technical support, and those levels are 1.2664, 1.2694, and 1.2707. So those levels are now technical support. And what about this Elliott wave count? It looks like the wave 5 might be extended, and there is still bearish divergence. Even with that spike, that's even bigger bearish divergence here. So I'm going to leave my count here, my Elliott wave count, and I'm just going to mark this let's say I'm going to mark this bearish divergence here, and then just under the next target. So wave 5 must be in 5 waves, so let me just move it here. There you go. For now we got only wave 1. Let's say this consolidation will be wave 2, so wave 3, 4, 5, and wave 5 will be done. So, and it will be overextended, so that's quite interesting. So we might see some very, very sharp reversal on the British pound very, very soon. This scenario is valid as long as the level of the wave 1, which is located here, and this is of course the black line, 1.2567, is not clearly violated. If it is violated, then the whole situation here that we have in form of the impulsive wave scenario is wrong basically, and we are going to switch to the next best scenario, which of course would be downside, to the downside, and it would be corrective. So that was the British pound. Let's just find out what's going on the British pound to Japanese yen, because we got the situation with the Japan data and the UK data, and what do we see? We see an increased movement to the upside. But if we switch to the daily, and there you go, you can see that this is one big uptrend. So the Japanese yen is weak to the point of that we haven't seen since the beginning of the 2023. So right now we are approaching the highest level for the Japanese yen in 2 years, at least in 2 years. I just looked at the situation here. So we got 252, the swing high from the 29th of the April 2024, just before the market Bank of Japan intervention and then correction. Since then, only 2 days are red, the rest of them are green, and that means bulls won't stop. Basically, bulls won't stop, and they want to go higher above the level of 200. So basically it looks like a very, very strong uptrend, very, very strong uptrend that should be continued soon. This is the only, let me just take my measurement. I would just want to have my, let's say I want to have my rectangle. Yes, there you go, price range tool. And as you can see, this is the only correction. It's a 1% correction, and this one is even smaller. After, of course, we've done something like this, right? So that's the that's the 4.5% correction. That's the biggest one. Now we got only 1%, and we're still going up, despite the fact that the market conditions are extremely overbought. We're still going up, as there is a very, very strong uptrend, and the bulls want to continue this uptrend. So if we speak about the Japanese yen, let's take a look at the different, very important market, euro versus the Japanese yen. Look at this, almost the same situation, which means that this is the Japanese yen weakening that is being continued all across the board. 171.52 is the next target for the bulls on the euro to Japanese yen. That's the same situation. There is nothing else, nothing much to say here. As we approach the yesterday's high, 169.88. If we break it, then we can even go above the level of 170 easily. Momentum is strong. It's not even overbought. So we expect this market to continue to move higher as well, as long as the Japanese yen is weakening. 4.4% correction is the biggest one, and the last one is apparently 1.22% only. So this one is even smaller than the previous one. So there is no overbalance of price and time. We should see higher levels on euro to Japanese yen. There are some data from the US as well. So because of that, let's take a look at the S&P 500. And the S&P 500 on the 4-hour chart is moving as expected. What do we see here is some sort of the impulsive wave. 1, 2, 3, 4, 5. Okay, let's leave it like this. Now we might have a correction. We might be still continuing the correction, but there is still upside for this market that needs to be covered. Local high and the swing high was made at the level of 5,325. Now the levels of 5,275 and 5,260 will act as the technical support, and this situation here is invalidated only if the level of 5,089 points is invalidated, because this is the top for the wave one. The momentum is strong, the momentum is positive. Of course, it's in the area of the extreme overbought, right? So that means we should see some pullbacks, of course, but the trend is so strong that we should not be expecting. We should not expect this market to come down anytime soon. Okay, last but not least, let's just finish with the, of course, Bitcoin. What is Bitcoin doing? Bitcoin made 3 ways to the upside, and the last high was 71,973. So we will mark this level here perfectly into the supply zone. Let me just zoom out a little bit. There you go. Now we are doing the wave 4 correction, and there is still a wave 5 to the upside that awaits us when the correction wave 4 is done. So we got the wave 1, wave 2, wave 3, wave 4 is in progress, and now wave 5 is waiting for the development. So everything goes according to our plan. No surprises here. Bullish outlook for the Bitcoin as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.